All right, howdy ho, everybody. This is actually take three. I had to figure out what's going on with these. If you've seen my personal YouTube channel or this YouTube channel with trading and business and stuff, man, I tried to do live stream and my whole system was shut down, and I was trying to figure out what's going on. Man, I had to delete so many apps and video games that I had on this PC. But anyways, let's get back into it. It's been a minute since I made a video. I saw this post earlier today, and I was like, I need to get consistent with making these videos. Um, we'll go into that later. But anyways, I wanted to talk about. I saw a lot of people talking about this for years now that Bill Gates is the largest landowner of farmland, and I wanted to kind of dive deeper into it. Now, personally, if you don't want to watch this video, I'm gonna give you my personal opinion. I don't believe it's anything sinister. I know everybody has these views and stuff like that. I could be wrong. I don't know Bill Gates. You know, if I was a cool guy, maybe I could call one or two people who I think know Bill Gates and be like, hey, could you ask him? But that's so stupid, because if I was Bill Gates, I would tell you, what the hell are you even talking about? So, or maybe laugh and then maybe I might feed into it. Who knows, man? It just depends on how my mood is at the time when somebody asks me a question like that. I might be like, yeah, we're doing this to depopulate the society because there's too many people here. Or if I'm in a joking mood, but if I'm in a serious mood, I'll be like, what the hell are you talking about? I'm like, don't call me for this bullshit. So, and I know I do curse. Like I decided I'm gonna curse. I'm gonna be my authentic self. So what I'm gonna do with this video, we're gonna watch a video talking about Bill Gates and the land stuff. And then also I want to go over some companies that deal with land. So this is Vanguard Real Estate ETF. This isn't the farmland stuff, but this is just a real estate ETF. And then there's some other stocks. I don't think I did any other ETFs. I did the stocks. I did their 10Ks. I brought up some articles and I brought up some videos. I don't know if we're going to look at all the videos, but I just wanted to give myself some variety because this original video was bullshit. So we're going to get rid of this one.
Bill Gates owns.
I got like 5 minutes into this video. So, and you know me, man, like I talk. So a 5 minute video like this could really be like 30 minutes. So like, trust me, like we're going to have to do this all over again. Hopefully, I'm a little bit more upbeat now because I got a little bit more energy because I'm not worried about the thing crashing. If it does crash, we'll probably go another 2 months without making videos. Psych. But I know I'm talking fast. Let me slow down a little bit. But yeah, so we're going to get into this video. And yeah, get into Bill Gates buying up U.S. farmland.
Owns more land than all of the entire city of New York. Jeff Bezos's land is double the amount, clocking in at 420,000 acres. John Malone, the largest private landowner in America.
And that's one of the things I do think that's interesting. Everybody talks about Bill Gates owning farmland. Now, the land in general is valuable. I think it kind of just comes down to specialization or like focus, because he could have bought any piece of land. Like there's somebody that owns this whole mountain, which is weird because you think, oh yeah, like that's just open land. Like no, somebody, like it could be one person that owns this whole mountain, or it could be multiple people that own this mountain, or maybe people have a home somewhere on this mountain or whatever. Or maybe it's an investment group or hedge fund or mutual fund or whatever, private equity, whatever. Everything is owned by somebody. It could be the U.S. government owns it, and maybe they might sell it off. Maybe they might say they might sell it off and say you can't even do anything with this land. But ultimately, the reason why I don't think it's anything sinister is because when you're dealing with a lot of capital, like Bill Gates, or even if you don't have as much money as Bill Gates, you never want to just have capital sitting in the bank, because every single year it loses value because of inflation. Now, let's say, for example, this is why I say I don't think it's anything sinister, because let's say you have every stock you want to buy in America. Let's say there's other stocks you have globally as well. Let's say you have some stocks in Japan, there's some stocks in China, some stocks in, Italy or Iran or whatever, any stock market, Dubai. And let's say you also own some land in other countries as well. Well, we won't go into that. We'll just say you own stocks that you want, you own the bonds that you want, and you still have capital to deploy because you don't want to have 100% risk exposure to just US markets or just the US dollar. You also have bank accounts in Brazil, you have bank accounts in Korea, China, you have some euro in the eurozone or whatever. And then now you still have capital that you need to deploy, but you don't want to have 100% risk exposure to currency. You don't want to have 100% risk over exposure to equities in the currencies you have capital deploy in. And then you also have some bonds in those countries as well. And you don't want to just have exposure to uh, equities, what else did I say? Currency and bonds. Then let's say you have crypto, you have some cryptocurrency that you bought, and then let's just say you still have capital that you want to deploy. Let's say you own some private companies through holding companies or whatever, and you still have capital that you want to deploy. You can choose real estate. There's so many things that you can invest in, and that's pretty much what I'm getting to. You can invest in so many things, and there's so many things of value that will grow and appreciate over time. That's better than just having a savings account. You do not make money having a savings account. A savings account, and I'm not trying to sound elitist or like I know everything, but in my personal opinion, there is no need to have a savings account when you can have capital deployed for investment. Now, if you want to believe that you have a savings account, let's say that man, this is kind of going so in depth. I hate when I get like, I'm not gonna get into this. We're gonna go through this video. Well, let me stay on track and talking about my view. You can have, let's say you bought Microsoft 10 years ago and now all of a sudden it's worth, let's say you put in 10 grand, now it's worth 15 grand. Let's say for whatever reason you need access to capital. You could take a grand or two from that initial 10 grand investment that has appreciated in value over the years or months or whatever, and take some of that and pay yourself. I mean, yeah, you're going to have to pay taxes on, capital gains or whatever, but in my opinion, you're going to make more having capital deployed into the market. If it's real estate, stocks, bonds, whatever, potentially, hopefully you'll make money over the long run. As long as you're not trying to day trade it and using a whole bunch of leverage, usually investments go up over time. Now, and that's also saying you're not trying to short stocks either. But if you're long only buying stocks, buying land, buying assets that appreciate in value with inflation, it makes sense to not have a savings account, because if you do come into a rough time where you need to take the money out, you could always sell off some of your shares or sell an asset or whatever. Now, hopefully and that's why I will say it makes sense to have liquid assets like stocks versus just having 100% risk exposure to a privately owned company, because it's going to be a lot harder to get access to cash unless you want to do, some different, more advanced levels of financing where you're doing like an equity line of credit or something like that. Like, I forgot what they call it, like buy, borrow, die type thing. And we'll go into that in a later video. But anyways, I just don't believe that it's something sinister. I just think that, Bill Gates has a lot of capital to deploy, and instead of just buying natural resources, one of the things you also get with farmland is you do get some cash flow, because if you have a farmer farming the land, there's going to be some type of cash flow coming in as well. Maybe you don't need it, but it's cash flow is cash, So that's why I think it makes sense for Bill Gates to do what he's doing. Now let's go deeper into the video. Maybe they already said this in the video, because apparently I already liked the video. I mentioned that in take two when I did this, but thankfully take one was like 5 minutes. But anyways, I think I may have watched this video like when it originally came out in 2020, but I don't remember anything in it. So we're gonna watch it again and talk more in depth on this.
Owns 2.2 million acres all by himself, a landmass slightly smaller than the island of Puerto Rico. America is enormous. Yet 100 of the richest and largest private landowners in America own 1.86% of all the land available in the United States, the majority of their land being forests, ranches, and farmland.
Some people like myself find farms beautiful and peaceful and a nice place to live.
I agree with him. Also, he's the CEO of Interactive Brokers, which I do use. Well, I've used the US. I have to figure out how to use it because I haven't used it in years. But anyways, I love ranches. I love like to be honest with you, I really love ranches in Wyoming and Montana, to be specific. I've seen some ranches in like Alberta, Canada, but I just really love the scenery that I've seen at ranches in Wyoming and Montana specifically. Now I looked at some in Oregon and Washington, and I do love the forest vibes, especially when it's raining and all that stuff. But I just really, really love like the scenery of owning like a cattle ranch or a bison ranch or something like that in Wyoming or Montana, man. That's really one of my ultimate goals, is to own a ranch out there.
Land is only getting more valuable. In the mid 1990s, farmland was valued at less than $1,500 an acre, adjusted for inflation. By 2020, that number had grown to $3,160 an acre.
It's expensive. So if somebody is desiring land, it is primarily people of wealth who can afford it.
Institutional capital is growing and it's becoming a bigger piece of the market. It's about a $3 trillion asset class when you look at the whole U.S.
However, not everyone is benefiting from the rise in farmland prices.
It's going to continue to be harder for farmers, for beginning farmers.
Oh, you know what's crazy? I actually remember what I said in the previous video, which very rarely ever happens when I do have to make a second recording when the thing shuts down. But anyways, I think that when it comes to asset prices, these things are going to explode in value. So let's just say that you're like, oh, in 10 years, I'll finally get into buying a farm. And let's say you look at a farm today that's worth, let's just say you find a farm that you like and it has everything you want for like $2 million. Man, in a decade from now, that $2 million farm can be worth $6 million. So let's just say you didn't plan for inflation, you didn't plan for whatever ends up happening in land values between now and what is it, 2025? We'll just say 2020. Let's just say 2036. So let's say in 2036 you're like finally ready, like, oh yeah, I'm finally gonna buy a farm. But then now every farm let's say you saved up to $2 million to buy a farm, and you didn't plan for inflation or the asset values going up. Now you're looking at the farm that you wanted to buy, or a farm similar to the one you wanted to buy 10 years ago, and now it's $6 million. In my view, for people to really like see growth in the capital that they have, you're going to have to use some form of leverage and investment groups. And in my opinion, I think a lot of people who want to get into business or investing are going to have to come together as investment groups to see, decent upside potential in their portfolio, because a lot of these assets are just going to go even crazier in price. With you have inflation going crazy, and then you also have asset prices just are going to skyrocket. And the fact that a lot of people now are worried versus 2020, I will say that versus 2020, you had people just flush with cash. I mean, interest rates were super low. Credit card companies are probably giving people a ton of credit, line increases, blah, blah, blah. But then now it's 2025. Really, since 2022, I felt like we've been in a recession when the Fed decided to cut interest. I won't say we were in a recession once the Fed decided to cut interest rates, because that was in January of 2022. But I would say in June, July, August, September of 2022, you really, in my opinion, it was recession. And, there's a lot of stuff we have to talk about overall, but this video is going to end up being like an hour long at this point, because I can't stop talking. In my view, we've been in recession. Now, I know they'll say that it's transitory and all this stuff, but then jobs were decent. Inflation was decently coming down by 2023 because they were so aggressive in 2022. The Fed was so aggressive with raising rates with quantitative tightening. Oh, but that being said, a lot of people now in 2025, a few months from 2026, people aren't as optimistic about the market. Now, there's a huge divergence. Oh my God, this is me getting to macroeconomics, and this is a video about Bill Gates and farms. So we're not. I just love talking about this. If you haven't realized, I love talking. And maybe you're gonna look at this video and be like, man, this guy has no idea what he's talking about. He's an idiot. But I've talked to guys, people way smarter than me, and we're kind of like on the same path when it just comes to what's going on and stuff like that. But you'll be like, man, this guy doesn't know what he's talking about. Like, I trust me, I know. But I'm just saying that, like, I love talking about finance and economics And maybe I am wrong, who knows? But I just know that a lot of people aren't feeling as optimistic about the market from I'll probably say like a person who isn't trading or investing every single day. They might not be as optimistic because it's hard for people to find jobs. Rates are high, mortgages, let's just say you bought a house in 2020 and your mortgage was $2,000 a month. Maybe it's 4 or 5 grand a month now, and you're struggling to make the payments to keep your house. There's a lot of stuff going on. Everybody's lives are different. Everybody's experiencing different things in this lifetime this timeline that we're currently going in. So anyways, I digress. I personally believe that people are going to have to come together as investments groups and start investing together. Pooling capital. Let's say you decided that you wanted to buy a farm for $2 million. You didn't equate for inflation and the fact that the similar farm that you wanted 10 years ago isn't the same price. Then let's say you have some other people, you find some other people in some chat rooms or Reddits or whatever that also want to buy farms, and you guys pull capital together and you buy the farm together. Now I will say this, in doing that, because I do remember saying this in the last video, that when it comes down to your investment group, let's say you had 3 other people that came together, to buy the farmland or whatever for $6 million. Let's say that the farmer is willing to sell for $6 million, but then let's say Bill Gates comes to the table, or somebody like Bill Gates, and says, "Hey, look, I know you want $6 million for this farm. I'll give you $5 million cash." Now, let's say your investment group was trying to get creative with the financing and do some type of SBA loan or I don't know if there's any type of farmland loan things or whatever like that, but let's say you guys wanted to use leverage and you didn't want to use all of your capital to buy the farmland. So let's say you guys come with, well, we'll put down $4 million and we want to do 25% financing, seller financing from the farmer or whatever. That farmer is going to take the $5 million from Bill Gates if it's just straight cash. You might even just take 3 million cash or 4 million cash or whatever, because it's cash. He's not having to do any seller financing. He's not going to have to go to the bank or anything like that. Like, everything is just clean cut. Like, I get cash tomorrow and you can have the property. And that's where I think a lot of people who are newer entrepreneurs or newer people who want to get into growth through acquisition or these SME businesses and stuff like that, you're gonna have to come together as investment groups. And like I said, the whole point of me doing these videos is to find other traders, investors, and who want to make investment groups and stuff like that, and we could all just network together. That's why I don't plan to ever do a course or anything like that. Everything is free. Like, I'll talk about trading and we'll talk about investments and all that stuff, and then you might think I'm a dumbass. You might say, and screw this guy, like I would never invest capital with him. Or I don't even like this guy. Like, I wouldn't even want to be friends with him. You probably didn't even get to this point of the video if that was the case. So, ultimately, the goal is for us just all to come together and find ways to, make money, trading, investing, and investing in businesses or real estate or whatever. So, anyways, I think that that's going to be the future when it comes to people who want to, gain, I guess, I don't even know how to put it, who want to become wealthy within a shorter amount of time. Because if you're going to save for a day, like I mentioned earlier, if you're going to save $2 million over a decade, we could have easily put an investment group together. We each put in 200 grand. It's like, I'm just saying, it's a lot easier for us to get to 200 grand and 10 of us put the $2 million together. And then we didn't miss that decade of inflation growth. So anyways, that's the thought. But I do agree that it's going to be a lot harder for newer farmers who want to come into the business, or newer business owners who want to come into the business, who don't have as much capital to deploy as somebody who already has a lot of capital. And if they really want that asset and they come with cash, they're going to get it.
Like myself, if prices continue to go.
And I will say this, if we all came together for that 2 million and we didn't want to use leverage, and we were like, we really want this property, or we really want this business, and we said, and let's just say now we're in today in 2025, they say the farmer wants 2 million cash, and all 10 of us come together and we have 2 million cash, and Bill Gates comes and says he has 2 million cash. This will also be the tricky part is now that we say we'll give them 2 million cash, if Bill Gates really wants this property or this business or whatever, he can say, I'll give you 3 million cash. Now that's where it becomes an issue because now it's a whole different ball game we're playing with, but that does happen. And that's just something I kind of want to talk about on this channel.
Go up. Everything's going up.
Land is critical, and it's the center of how we survive and persist as communities and as people. And farmland in the US is something that we don't think about that often.
So, why are the ultra wealthy investing in farmland? And what impact will it have on the agricultural industry? In 2020, Bill Gates made headlines for becoming the largest private farmland owner in the US. He had accumulated more than 269,000 acres of farmland across 18 states in less than a decade, shielding his purchase by buying up land through shell companies. Why? It's a good economic investment.
That land has always been something that the ultra wealthy people of real means have desired. It has great intrinsic value. Beyond that, it is a limited resource. They're not creating any more of it, and in fact, quite the opposite. We lose farmland all the time. In the United States, we're losing farmland at a rate of about 2,000 acres a day. It is not only more and more important over time, but we have less and less of it. So it's an asset with increasing value.
Farmland values began rising in 1988. And except for the single-year declines in 2009 and 2016, values have seen a steady increase over the years. In the mid-1990s, farmland was valued at less than $1,500 an acre. By 2020, that number had grown to $3,160 an acre.
It's not correlated with the stock market and other major asset classes, and so people like that diversification, and it's been a very stable.
I do not agree with him at all in that standpoint. I'll say this, like, if it's not, I would say this, if you own the private farmland, it's not correlated to the stock market. But in my opinion, everything is asset-wise is correlated to the stock market. Because if the stock market is doing horrible, yeah, you could say, I'm not going to sell this land. But you're going to find, there's going to be a person who's really feeling the pain of the stock market. Maybe they need access to capital and they're willing to sell their farm for a lot cheaper price. Now, it's up to you if you have more capital to invest it or not. But in my opinion, I know a lot of people are trying to say gold isn't correlated to the stock market or crypto isn't correlated to the stock market. But there's always people are always deciding things. Now, even if you're talking about an AI algorithm doing your investment for you, that AI was created by a human. I don't think we've gotten to the point yet to where AI is creating other AI trading systems. I don't think, or investment systems. I don't think that it could be. I have no idea. But if the stock market is tanking, asset prices as a whole is tanking. And I'll say this, in that country. So just because U.S. stock market is tanking doesn't mean that India's stock market is tanking or Korea's stock market is tanking. Those assets will probably still be fine. But the U.S. usually does control like how the globe sees asset prices, unless that central bank in that country is doing something completely different. Like Japan did. Japan did that in like 2023 when they decided to do quantitative easing when everybody else was doing quantitative tightening. So that was a rare thing. I mean, Japan has been struggling. Japan has been trying to get inflation for decades. So that's a whole nother subject. But anyways, when it comes down to his statement, I do not agree with it at all. I think whenever asset prices as a whole are falling, a majority of other asset prices are falling as well. Like a lot of these things are all correlated with each other one way or another. Now, he might say that a majority of farmers aren't going to sell their land just because times are tough in the stock market, but there's always somebody. It could be a divorce or it could be some reason. There's always a motivated seller somewhere.
performer. If you go back to COVID, when the stock market, lost 10, 20, 30, 40% at the beginning of COVID, you don't wake up and find out that your farmland's worth 50 cents on the dollar.
But I would say that for any asset, just because the stock, like let's just use Amazon for example. I think Bill Gates had, I mean not Bill Gates, but Jeff Bezos had an interview where he was saying during the dot-com bubble, the shares tanked, but that doesn't mean that the employees aren't still working or that there still isn't capital coming into the business and people buying things. So I do agree with him from that standpoint, but asset prices are asset prices. I mean, it just takes one person to sell an asset price way below the intrinsic value of it, for whatever reason, for the asset prices to come down. So I still don't agree with him, right? I do agree that you shouldn't just sell your farm because the stock market is doing bad. But if you're feeling pain, if the bank is saying you need to pay off however much you need to pay off because of X, Y, and Z, and you don't have the cash and you end up having to sell the farm or it ends up being foreclosed on or for whatever reason, these are things that happen. I'm just saying that, like, finance isn't rainbow and sunshine. You know what I'm saying? Like, you got to always think about what could potentially be the worst case scenario.
The next day.
Bill Gates is not the only one eyeing this investment. In 2011, the top 100 largest private landowners owned about 32.7 million acres of land across the United States. Today, that number has grown to over 42.1 million acres, roughly the size of Florida and Connecticut combined. His farmland grows onions, carrots, and even potatoes that are used to make McDonald's French fries. Thomas Peterfy is the 17th largest private landowner in the U.S., owning 581,000 acres.
The reason I own lands in the Midwest is because these are agricultural lands, right? And that's where the farms are, right? I'm not farming in Boston.
If someone is really interested in acquiring a piece of land, and with farmers, once you own one parcel, you often want to own the parcels that are adjacent to it. So if you can make those purchases quietly, it might be a far more successful way to.
And they'll probably talk about this in the video, but the reason why you want to do it quietly is because a lot of farmers or just people in general, like, they're not going to want, like, for instance, when Bill Gates bought a lot of this farmland, I'm pretty sure nobody had an idea who it was buying the farmland, because people are inherently anti, billionaire or establishment or one wealthy individual or whatever from buying, assets or land or, buying up the town and all that type of stuff. And it's always going to be that one person who's like, I'm not selling. You know what I mean? Like every movie, every movie that kind of has this like dynamic, they're like, I'm not selling. You know what I'm saying? And then like, they'll have like maybe the billionaire or whatever is like some evil person and they're like damaging their farm or cattle or whatever. So they eventually have to sell. But I mean, in my opinion, in real life, I'm pretty sure it does happen, but I don't think it's like that in every situation. You'll be like, hey, you make them an offer. Maybe you continue to make more and more offers until eventually the number is just too crazy to where you're just like, okay, whatever, like, I'm just not even going to worry about it. Because from a realistic standpoint, when it comes to investing, I don't think that a majority of investors are like evil. Now, I'm not saying that there aren't evil people, but I mean, a majority of people are just going to want to do whatever is easy and can make money. I'm not going to do anything to put somebody out. But if let's just say that if they ended up getting foreclosed on, I would come and buy the land. And I mean, you could say that might be evil or whatever, but if let's say that there was a farmer who just was having capital constraints and didn't want to sell, and then I come in and buy it and it's being foreclosed, and it depends on who the investor is. You could say, hey, look, I know capital wise you were going through some constraints and we can work on that, figure out what we can do to make everything. But I like, you buy the foreclosed farmland that was there. And then maybe you keep the farmer there and say, hey, look, I know I'm buying your land. I know this is family land, but I'm not trying to put you out. You could keep working the farm. We're going to have to figure out how to make the cash flow be net positive. But you don't have to put them out. You know what I'm saying? Like, in my opinion, that's how most business is done from my viewpoint and stuff that I've seen. But, I'm pretty sure there are situations where they're like, no, kick them out. we're going to take the land and put somebody new in there that can make it cash flow positive. I'm pretty sure that does happen. But in my viewpoint, I don't see that as being net positive, and I don't see that many investors who do make acquisitions do that. Usually you want to keep the person there because they know the land, they know the people in that town and everything like that. And this isn't from a land perspective. Normally I've talked to people who done businesses and stuff like that, but just because you buy a failing business doesn't mean you just kick out the CEO or like the accountant, or maybe you kick out the CEO. I will say that maybe you kick out the CEO, but sometimes you don't. Maybe sometimes you just buy the land and just say, hey, look, I'm gonna send an analyst or I can't even think of the term, a consultant or whatever, to come and figure out how we can make this cash flow positive, and then make some new systems and stuff like that, and then you just move on. Anyways, we'll get back to
make those purchases economically.
They were not one large transaction. There were several smaller pieces, and they were usually.
I've always loved this view. Like when you're on a plane and you kind of see that those like rectangles and squares. I always thought that was so interesting.
Auction.
The vast majority of the land held by the largest private landowners are forests, ranches, and farmlands, located in states west of the Mississippi River, with few exceptions like Maine and Florida.
When we think about farmland, we think about the Midwest being, the most fertile, most valuable farmland in the world. And I liken it to being the Manhattan of farmland when you look at.
So this is interesting. I read that actually the best farmland, I won't even say in the world. I'll say on the other continent, in like Europe, Russia, Southeast Asia, not Southeast Asia, that's a completely different part, but and like that, like Europe, Asia, Russia, China area is Ukraine. I did not know that Ukraine was like, I think they call it like the breadbasket of Europe, which is crazy. I didn't, I don't know if it's as valuable as land in the Midwest, but I found out that it's really valuable. And I don't know if that's why the whole stuff with Russia and Ukraine is going on, but I did find it interesting.
Iowa, Illinois, those types of regions. But then when you look at California and the Pacific Northwest up in Washington and Oregon and the Mississippi Delta, those are some other major regions that you'll see a lot of that major capital playing in. And that's where the agricultural productivity is.
Today, the U.S. Department of Agriculture estimates that 30% of all farmland is owned by landlords who don't farm themselves. Buyers often purchase land from farmers who have owned it for decades, many of whom are asset-rich, but maybe cash-poor.
The way the market works is the land transitions primarily to the people who will pay the most money for it. So a lot of farmland gets purchased by non-farmers.
I think many farmers would like to see their land remain in agricultural production, would like to sell it to another farmer, but the economic realities for them are typically that they've spent their life farming, their retirement, their equity is all in the land and tied up in selling land.
Institutional capital is growing and it's becoming a bigger piece of the market. And it is part of that wealth transfer that's happening when you look at the demographics behind who owns farmland.
A profit can also...
And I also have to say this. I know I like the guy who was just on... I know I said I didn't agree with him. Me saying I don't agree with him doesn't mean that he's not wrong or right. And that I am right. I think I need to make that a statement because, I'm not investing in farmland. I don't know, but I'm just saying that from a standpoint, in my personal view, I do think that all asset prices are correlated to an extent. Now, I'm not saying that means that you should sell once the stock market starts to tank or anything like that. I don't think that would be smart. But what I am saying is that eventually people start to feel the pain. And it only takes one farmer in that area to probably sell at a very depressed price for the theoretical value for the land in that area to drop. That's just how real estate usually is priced amongst people. But I'm not saying that means that your land is way cheaper. That's why, in my opinion, I think it always makes sense to buy and hold and just buy these assets when you can to use as less leverage as possible for things you don't have high conviction in. And even if you do have high conviction, still have, cash to where if a bank is like, hey, you need to pay X, Y, and Z or pay off this, you have the ability to either raise cash or you have some way of just paying it off so you don't lose the asset. But, and I will also say that it's also to make sure you don't have any cross collateralized debt, because if you have one farm and then let's just, well, we're talking about farms here, or you could talk about businesses or anything, but if you have one business or farm or property that's an asset and you cross collateralize that debt and buy another asset, that's how the house of cards starts to tumble. And you can, there's one guy, I'll make a video on him. He lost like, I think it was like $2 or $3 billion in like a matter of months because he did cross collateralized debt on a lot of assets. Like, he went crazy with leverage. I mean, absolutely crazy. And then he was buying during, I think it was '08, he went broke. Or maybe it was 2000 or '08, I don't remember. But it was one of those when the markets just tanked and he was just buying lower, using leverage. And he ended up losing like $2 or $3 billion. And his whole net worth was $2 or $3 billion. So he went completely broke in a matter of months, which is crazy. But yeah.
Be made by utilizing the land in numerous ways. Approximately 39% of the 911 million acres of farmland across the U.S. is rented out to farmers.
Dang, I didn't know
and 80% of that rented farmland is...
It's probably even crazier now, because this video was like 2021 maybe?
Owned by landlords who don't farm themselves.
For a lot of non-farmers who purchase property, they may then hire somebody to farm the property for them. They may lease the property to be farmed by others. And leasing is actually often a very good strategy for farmers if it's a well-structured lease.
What we're seeing right now on Midwest cropland cap rates, it's close to 2.5 right now. And so, you go buy a farm and you put that cash rental lease in place, you're going to be looking at about a 2.5% return on your capital.
In some cases.
I know my baby is going to watch this video, so let me explain. When it comes to cap rates, why I said a 2.5% cap rate is really low. I mean, from my perspective. Now, I'm not looking to, that would probably be like a, dang, I haven't looked at real estate in so long. I think it was like I think they call it like Class A. Like, you're going to probably get, like, that makes sense for a Class A, like a nice, really well-run operation. A 2.5% cap rate is a 2.5% like yield on your investment. I actually had this up. So that's pretty much, where is it? Like the dividend yield. So the dividend yield on that property would be like 2.5% versus with this Vanguard real estate ETF, the yield right now is 3.82% annually. So that's what the cap rate. Now that's why me saying that's really low is because, if I were to look at something, if I were to get into real estate, I would want to look at something that's like a 5 to 10% cap rate if I could. So I would be looking at like class. I don't think it's even class, but it's like class B or C properties where you could add some value to the property, or in this case, the farmland, and make it more, efficiently ran or whatever, or maybe you spruce up the equipment or the operations or whatever. You add value to the land, that way it makes more money. So anyways, yeah.
There are tax incentives that incentivize landowners to have farming occurring on their land, and that is giving them a tax break essentially for the work that the farmers who are leasing from them are doing, but it can in some cases mean that the farmers get a break on the lease price as well.
The involvement of private landowners has had a significant impact on farmers in the United States. Some argue in its support, suggesting that the process of leasing farmlands has given new opportunities for farmers who wouldn't normally be able to afford to farm.
One of the biggest barriers for incoming farmers is the high cost of farmland. And one way around that is if you can have a good lease agreement with a landowner, you can farm successfully without having that initial outlay of cost.
So the young farmers are just as happy to lease the land, because whether you are young or old, it's a business, right? The business of farming is becoming more and more specialized. There are the people who concern themselves with what to plant. There are the people who do the planting. who own the machines and work the machines, and then there are the people that market the produce. So in efficient farming, it's not one person that's doing the whole thing.
Those who are against the idea worry that new farmers can't compete with the likes of Bill Gates when it comes to acquiring land.
People are swooping in that don't even live in this community and land grabbing. They can live in California and be able to purchase property.
Oh, and this is pretty much like this lady here, Leticia. I believe I'm pronouncing it wrong. If you ever watch this video, I'm sorry if I pronounce it wrong. Or we'll just say Miss Marshall. Yeah, I mean, like, I don't say that either way is wrong or right. You know, like from a business perspective, it makes sense for either one party. I mean, she's a business owner just like Bill Gates is. Now, you might say that she's kind of at a disadvantage, but it is what it is. Like, we're all kind of put into this world with different circumstances that you either are working either in your favor or against you. So I'm not saying that she's right or Bill Gates is right, but it's just the reality of the world we currently live in. And I think from a farmer standpoint, it would suck, especially if they're trying to come in and take your land and using unethical tactics. I think that that's wrong, and I would never like. I know a lot of people probably say that I kind of like beat around the bush or like I try and stay neutral, but I mean, when you think about it, I can't say that it's right or wrong on a lot of different topics because of the fact that I can see the perspective of different people. And in my opinion, like, everybody's going to do what they're going to do to benefit them at the end of the day for the most part. So
they can live in California and be able to purchase property here in our city just like that. But somebody that lives here, that works here, that cuts the grass next door because that lot hasn't been cut in a year, that picks up the trash on the streets, they attempt to purchase property and they have to go through hoops and hoops and hoops.
With increasing
I do agree with her on that because let's just say that like I'm an investor and I wanted to buy land in I think Iowa or whatever. Let's just say I wanted to do that. I'm not the one having to go through the hoops because you would have enough capital to pay lawyers and accountants and all that type of stuff to do all that stuff for you, and you just see the property that you want and you buy it. Versus like if I'm a farmer and I want to buy land, I'm going to have to first come up with the money to buy the land. Then I'm going to have to come up with like figuring out what other legal things I have to do to be compliant with whatever thing that goes on with farming. I don't know if the FDC or whatever does anything with farming. I don't know how that stuff works because I'm not in farming, but figuring out what other legal things you have to do, figuring out how to farm, what to farm, if the land's fertile or not, the seasonality for all that type of jazz. There's a lot more work that comes into it. But in my opinion, like you said, the previous guy who owned Interactive Brokers was talking about, young or old guys wanting to just lease the land. I mean, they own the land, but you still get to farm. It's a specialization thing. So, I think both work. I think it just kind of depends on like which way you want it to work in. So I think for the Miss Latricia lady or Miss Marshall, she's coming at it from a different perspective of wanting to own the farmland herself. But if she really wanted to, she could form an investment group. She knows how to farm the land. She could get a group of investors together and say, hey, look, I want to do acquisition in other farmland, and I already have a farm here doing X, Y, and Z, and I believe we could really scale if we came together as a group. And that could happen, and you could get a group of farmers that create a private equity firm that buy up farmland and do things the way they want to. But I think really when it kind of comes down to this type of stuff, people want that independence. They don't like conglomerate type entities or like private equity or whatever. They don't want to become what they dislike, if that makes sense. So, but I mean, she could do it. I mean, like, I don't know how to farm land, so she could get with somebody who works in finance and raise capital and get other farmers to come together and buy the land. But or maybe it's not even other farmers. Maybe she's just the one farmer and she knows how to farm land, and then she just gets investors from different businesses or walks of life who invest and help her make land acquisitions and farms. But yeah, I mean, I don't know. I just think that, you know, she has the experience, so I don't think that she's at a disadvantage, or anybody's at a disadvantage when it comes to business. It kind of just comes down to knowledge and what you want to do from a financial and business perspective. And I don't think that she wants to do that. And I think that that's why she's somewhat at a disadvantage, is because she doesn't want to get investors, or maybe she doesn't know that she could do acquisitions. I don't know. But, or maybe she just doesn't want to become what she doesn't like. So, yeah.
Competition on land and increasing values of land, it really puts farmers in a challenging position because they are not competing against individuals with the same income as them.
I pursued the purchase of a 10-acre farm here in urban Louisville a year ago this month. And the owners asked for $1.75 million, right, for the property. You
know what's crazy? I swear I did not get to this part of the video. I think it was in this video, maybe it was the last video. I did say, like, I used $2 million as an example. I know I used $2 million as an example, so that just means to show your boy knows a little bit of something. So $1.7 million, but like that's a lot of money. That is not. I'm not making it seem like that's not a little bit of money. That is a lot of money. Like 1.7 million for anybody is a lot of money. But for her to do something like that, she would have to get an investment group together, and they would have to come together and put the capital together. Now, I'm gonna let her speak, because she might say that she tried to do that.
In urban Louisville, Kentucky, 1.75 million, right, for 10 acres. I couldn't afford that, but a developer swoops right in and is able to take that offer, that opportunity right out from under me, because they could.
And while
yeah, and that's what I was saying. Like, she could get together and just say, hey, look, they want, like, maybe it's some people in her network. Maybe she networks with somebody in finance, or maybe she networks with somebody in investment banking or whatever. And she's a farmer and she has the experience. Like, it would make sense for an investment group to back somebody like her, because she has experience in farming. Now, if I came out of nowhere and was like, hey, I want to start making acquisitions on farmland, I have no idea how to operate a farm. I don't know the logistical parts of it. I don't know the financial parts of it. So they're going to look at me like, what the hell are you talking about? Unless I get somebody like on my board, or I get a business partner or whatever that understands, like her or whatever, that to raise the farmland. And that's what I was saying. Like, the whole part of this YouTube channel is like to just network with people, man. Like, if she was ever to see this video and I have access to $2 million, or we have an investment group as subscribers or whatever, and we could all just come together and help somebody like her get the land that she wants, like that, I think that's a benefit. Like, I just think with this YouTube channel, or like the group that I want to put together, is just to help people, come together and network and invest together, so we could all make money. I'll eventually make money with YouTube one way or another. So, and I don't want to sell courses. I don't want to go rent a Lamborghini, because I don't own a Lamborghini, and be like, oh, hey, look what I did. And then start selling you courses for like $500 or $2,000 or however much people sell courses for. I just think that it makes more sense for us to come together and, just help each other. You know what I'm saying? Like, I would want somebody like her, I'm going to see if she has a LinkedIn profile or something. And I would want to be able to like say, hey, look, this is something that you can do. Because it doesn't seem like she's against private equity or, the farmland. It just seems like she doesn't have a business background. Maybe, I don't know. Maybe she does. I don't know. But it doesn't seem like she understands like growth through acquisition or whatever. And, putting together an investment group and all the legal stuff that kind of comes together with that stuff. So I think like her seeing this video or learning about investment groups and stuff like that would be beneficial to her. Because if she saw the farmland that she wanted, and she knew that, okay, I have people who are interested in investing in farmland, and we could just come and buy it, Maybe you have enough investors or net people in the network that could come and buy it cash. That way you don't have to take out any debt. And I would say that would be way more beneficial than trying to leverage up and, do SBA loans and all the other jazz.
Leasing might sound like a good idea on paper. It often puts farmers in a tricky spot.
The problem with leasing is that it really doesn't give farmers the long-term security that they need to invest in their business. If someone is saying, well, we're going to sell the land now, you have the option to stay or you could leave, that can put farmers in a really tricky spot.
In some areas, the engagement of private landowners has also led to soaring housing prices and cost of living.
When you look at these rural communities, there's definitely winners and losers in terms of various parts of the country. When you get into the Mississippi Delta, for instance, where they've lost a lot of the tobacco industry or the cotton industries evolved through the years, you've seen some of these towns really struggle and they've lost their industry, and that's created a lot of poverty in some areas of agriculture.
The jury is out on whether private landowners are a force for good or bad for agriculture. But more farmland is expected to make its way to the market in the future.
When you look at the demographics around who owns land, it's impractical to think that farmers are going to buy every acre that transitions over the next 20 years. We think in some form or fashion, about 50% of the farmland in the U.S. will turn over the next 25 years.
Well, at this time, I would say that the jury is out on whether or not large purchases by the ultra wealthy is a good or a bad thing. But I honestly do believe that having large land owners with the ability to look long-term at the land and do what's right by the land and maybe be in a position to, say, lease the land to incoming farmers at affordable rates, that could all be positive. And so I'm hopeful it can be that.
There are fewer and fewer farmers with every U.S. ag census, and there are a slight increase in the number of young farmers, but really at this point not enough to replace the farmers who are leaving the industry. So we need more young farmers, and we really need to support them by making.
Oh yeah, and I will say this. The video's almost over. That it was this one guy, because I really go in depth with stuff. So I was scrolling on Instagram, and I started getting farmers and farmland and business brokers for farmland and all that stuff on my Instagram feed. So anyways, it was this one old farmer. He was like maybe in his 70s, and he was talking about like he wishes that a young farmer would come to his farm and farm the land and learn, everything that he can. And he said he would just give the guy the land. Now he said I won't say that he said he would give it. He said he would do 100% seller financing. So the young farmer would eventually have to pay the farmer whatever price they came up with, but he was like, he would just give it to him because he doesn't want to sell to like Bill Gates or like a corporation or private equity firm or anything like that. And I think that's respectable. I agree with stuff like that. I mean, like, if you want to keep the land away from that stuff and you don't like it, I mean, that makes sense. But like his children didn't want to buy the land from or take over the land for him, and he doesn't have anybody to give it to. So, I mean, it's most likely going to get bought out by, Bill Gates or somebody like that. Or, maybe it eventually gets foreclosed on because the kids don't do anything with the land. And eventually, like, somebody's going to have to do something with it. So maybe I didn't look into it. I don't think I follow him on Instagram to give you a more in-depth story, but I think that was like maybe a year ago, or maybe it was when I first started watching this, maybe. But it was a while ago. And but yeah, man, I think, and he said that he was like, when it comes to wealth transfer, a lot of business owners and landowners don't want to sell to private equity or to Wall Street or anything like that, and they want to give it to younger entrepreneurs or farmers or real estate people or business owners, whatever. They want to give it to the next generation, but they're not going to give it to you for free. So I mean, they might be able to give you some seller financing or be a little bit more favorable. Oh man, that's horrible. They might give you more favorability to sell you the farmland or business at a higher seller financing value than you having to figure out how to get the capital or raise the capital yourself and get an investment group. So for young entrepreneurs, there's always hope.
Access to land possible.
And when I say that, even though there's always hope, you still have to look and find the person that wants to do stuff like that. So anyways, let's go into Gladstone Land. I think I brought up their stock. Is this it? No, that's the Vanguard one. One of these should be. Yeah, here we go. Oh no. Oh man, I changed it. Okay, I'm gonna have to go into Gladstone. But it's just Glad. So I'm gonna go to Trading View. Oh dang, I should have just brought up Trading View. But anyways, product super charts, and we'll go to Glad. Okay, so from dang, I wonder what this was. Oh, you know what? It's my indicator. You know, let me turn that off and this off, and we're just gonna look at the chart, the bear chart. It should be normal. Yeah, there we go. All right, so from a stock perspective, let's see what their yield is. Dang, that's a high yield. That is crazy. Now, I will say this. Whenever I look at places that or companies or stocks or whatever that have high yield, it's usually like very suspect to me. Like, I know a lot of people want that high yield, but to me, it's like it doesn't make sense to have high yield if the original capital I invested is losing value. So, like for instance, let's say I bought here in 2020. That's great. But let's say I bought the yield like up here, like when it was 29 a share. That would suck because even though I'm getting the yield, like my capital has gone down. Oh, it's not even half, but a decent amount. I don't know how much, maybe like 25%. So if I invested 10 grand into this, yeah, I should make about $900 a year from the yield. But in value, um, it's down to like 7,500. So even when you account for the yield that I'm gonna get this year, what is that, 8 grand? So it would take me 10 years to recoup my entire investment. And if there's no appreciation in value, that just, in my opinion, sucks. Versus like if you could find something, I know this is kind of talking about a whole different company, but if you could find something like this where you bought and it's just continue to rise in price and you're still collecting this, you see that this is why I say like I kind of like those things that are lower yield because of the fact. Now this is kind of because I know I'm contradicting myself. I know that. Hang on, let me explain. Because I said the 2.5% cap rate was low, but that makes sense if you have a solid investment. And like I said, with this is Kroger. This is a solid investment. Versus if we go back to Glad, when you're getting, yeah, people get hypnotized by that high dividend yield. And like I said, man, you don't want to buy something that's not going to appreciate in price and give you a dividend yield. So the reason why my kind of thought on this whole topic is a little different is because of the fact that when you get a high yielding asset with real estate, I have control over improving the property to give it more value. Now, when it comes to dividend stocks, I don't have any control. I can't make them make the asset more valuable. And that's pretty much why I know it sounds crazy when I say that, but hopefully when I'm making more videos and we kind of get more into like investment philosophies and stuff like that, you'll understand it more. But if I have control, I don't mind taking on more risk. If I don't have control, I don't want to take as much risk. That's pretty much what I'm saying. And because they're paying a high dividend yield, it doesn't mean more risk. It just means that, you know, the price is just depressed and, you know, they're paying a little bit more. But I would want something that's going to give me appreciation in the price of the asset and still pay a decent dividend yield. So usually that's going to be around like that 5% mark. Usually over that 5% mark, you know, you have to really look at the business and, you know, make sure it's something you want to do. But anyways, that being said, this is Gladstone Land. They own Farmland, and I kind of just want to show that like Bill Gates isn't the only one that's buying up farmland. I really don't think it's anything to concern yourself with to where you're like, oh my God, like this is going to be the end of the world type stuff. There were people in the comments that were making it seem that like he was buying all this farmland and he was because he wants to like stop producing or something. I don't even know. Like it was people had some crazy conspiracies in there, and I love conspiracy theories and all that stuff. But I'm just saying that like I just don't think that it's as sinister as everybody was trying to make it out to seem. Like he was why did everything change? Because I know for sure that I had other stocks and everything's now via V and Q. Because I think one of them, no, I had Glad. Hang on, man, this is annoying. I think I had this one, Farmland Partners. Let's see. Yeah, this is it. It's a REIT. Yeah, so see this one, and I will say this, like when you're looking at dividend paying stocks and stuff like that, you usually kind of want the price to kind of hover around the same area. You don't want crazy volatility because that would be crazy. You don't want, you do want to buy like when stuff is like, I guess somewhat depressed, but this is what I was saying, like when you see those dividend yields being like 10%, it's high, but I mean, it could always bounce back like this one did. It's just not my cup of tea because, you know, you're buying here and then you're buying here. And if you're dollar cost averaging, it can work. But I just want things that are nice trends. But let's see what their dividend yield is now. Yeah, see, their dividend now is like 2.35. It's pretty stable. But I'm pretty sure down here, it was like the dividend yield was probably like 10-15%, or I won't say 15, but I'll probably say like around 10% dividend yield. And it's harder for me to buy stuff like that because I'm worried about it's just going to keep tanking. If it's going to keep tanking. Now, if I'm really knowledgeable or I have high conviction in something, I wouldn't mind. But, you know, it is what it is. But I just want to say that, you know, I don't think it's anything sinister going on with him buying the farmland. It makes sense from an investment standpoint. I don't know if we're going to watch another video. I'm just going to see what else is on here. Because I kind of found a lot of different videos.
In September 2018.
Oh, man. I kind of wish I would have started this. Because I love Jake Tran, man. Jake. Man, see, I don't know why it keeps turning this stuff on and off. Yeah, see, it should have been on, but is it on? Anyways, I love Jake Tran's video. So, you know, I'm gonna do a part 2. I'm gonna end the video here, and then I'm gonna do a part 2 and start over with this one.
Man, even Jesus had a shooter, and God be having unbelievers that didn't mess up their demeanor. And yes, they know it's hard, they know, cause when they be up in those trenches, man, they show